The property sector has so far outperformed the markets with the anticipation of rate cuts, but other companies may also benefit. Let's discuss. My name is Den Slim, and welcome to another episode of Monday Market Outlook. The entire week built up to this moment, the Fed chair's speech at Jackson Hole. With markets uncertain about Powell's stance on rate cuts, his announcement came as a welcome surprise as he finally aligned with expectations for a rate cut this September. This brought the odds of a rate cut back to 91.5% from just 75% the previous day. Now, both central banks have effectively signaled future rate cuts, with the BSP reiterating last week its plan for two more reductions, aiming to close the year with a 4.75% policy rate. Although the BSP's rate cut was already priced in, the Fed's latest dovish stance rippled through the forex markets, driving the dollar lower against the peso, which strengthened to 56.80. Hopefully, this provides the market with a much needed boost as we head into the ghost month. Last week, the market opened near the 6,330 resistance zone but fell, then held around the 6,280 level throughout, likely pausing either in anticipation of the Jackson Hole speech or due to the long holiday. Now, expectations of rate cuts continued to lift the property sector last week, with the property index rising 1.28%, while the financial index remained under pressure, slipping 1.65%. Even on a monthly basis, the financial index was the worst performing sector, pulling back 5.25%, while the property sector outperformed the broader index with a 2.93% gain. With interest rates rising to elevated levels in recent years, companies have had to adjust to higher costs of borrowing. Look at the latest earnings reports, highlights which firms have been hit the hardest. No? So this chart shows how the year-on-year change in interest expense compares with the impact of these costs relative to their earnings. So companies like ASEN, Metrobank, SMC are among the most heavily affected, with interest expenses eating up a significant share of profits. But with interest rates starting to ease, these firms, not just property companies, could also benefit in the coming months. This includes names like AC, Globe, Tel, JFC, AEV, and DMC. Let's also look at some of the stocks with the largest foreign outflows since July or in the current quarter. We have the banks and the same names that are also suffering from high interest costs. No? So could we see a reversal of fortune for these stocks in the next months? So let's take a quick look at the charts for the stocks, starting with Ayala Corp. Ayala Corp breaking down the support level here at 585. So it looks like Ayala Corp may be headed down to 545. Now, the weakness in Ayala Corp may have been caused by the weakness also in BPI, which is the top foreign sold stock. Look at BPI's chart. It has broken down from its recent high of around 141. It is now down to 114, and it looks like it may make its way to the 109, 110 support. Also dragging Ayala Corp down is Globe. Globe hit resistance here at the 50-day EMA and has now gone back to the same level where it was at 1,632. So the breakout here failing for Globe Telecoms, probably in anticipation of the Conectado bill. The lone bright spot for AC is Ayala Corp with the recent rate cut anticipation. Ayala Corp bouncing off of the 50-day EMA could be on its way to 2840. Let's see what happens, though. AC now at 580. Can it hold this level in the next weeks? Because look at SM. See, what happened with SM is that after breaking down the support level at 833, it is now back to 776. So this might also happen to Ayala Corp if the current levels do not hold. So SM right now back at 776 could be a good time to buy. This has been a very strong support for SM. The downside risk for SM right now has significantly been reduced. So it's now down to 776. Maybe we can see some SM buyback happening later this week. So next we have DMC. DMC so far holding along the support level here at 1020. Dividends are usually announced near October, so let's see. Investors may just be waiting for that announcement for a possible catalyst for DMC. Let's take a look at Metrobank. So Metrobank has been sold off in recent weeks. It is now down to our buy zone at 70.15. It has so far held that zone. Could be also a good chance to pick up in anticipation of rate cuts benefiting their earnings, possibly due to reduced interest rate cost. A quick look at the telcos here, even PLDT hanging on to the support level here at 1,283, possibly also in anticipation of any announcement, no, pertaining to the Conectado bill this weekend. So Converge hanging on to the 1410 support. So far, a good bounce of that level for Converge. Now, as we've been looking at some of the laggards actually for the PSE, let's try to screen for some of the best performing stocks in the index right now. So what you can do if you have trading view, you just go to screener and set these parameters on your screener. So I have a save screener here called bullish stocks. So I usually visit this from time to time to see which stocks we can potentially pick up. So I make sure I filter this into big cap stocks, make sure the return on equity is above 5%, return on invested capital is more than 5%, and we make sure that the price is above the exponential moving averages. So we have here the EMA. The EMA should be below the price. So the EMA 50 should be below the price. The EMA 100 should be below the price. The EMA 200 should be below the price. Now, what this looks like in the chart here is that if we go to LTG, for example, right? So the 200-day EMA is below the price of LTG, right? 100-day EMA is below the price, 50-day EMA is below the price, 20-day EMA is below the price. So that's what this filter means. Don't set this to above price, right? So because if you do so, that would give you the reverse results. So far, the best performing stock month to date using this criteria: RCI, Nickel, SEBCP, Pure Gold, VMC, ICT. Of course, some of them not companies that I usually cover, especially RCI, Nickel, and VMC. But there are interesting names here: LTG, Manila Water, and ICT Pure Gold. Now, what I'd like to do is to look at the PE ratio and then set this as ascending. So this way, we can see that while these stocks are bullish, look at the PE ratio for Mega World: 3.32, GT Capital 4.37, LTG 4.84, even Robinson's Land at 5.61. Very, very cheap valuation. So despite that these stocks have already gained 25% in the past 3 months, these stocks are still cheap. So something worth considering coming into the Go Smart, and let's see what happens there, right? So heading into another shortened trading week, the Conectado bill is set to lapse into law on August 24 if the president takes no action. Now, however, Malacanang has signaled a willingness to address private sector concerns. So the question is, what does address actually mean? Will it happen after the bill is passed, or is the president meeting with companies over this long weekend. So the markets doesn't seem to see this as good news though, because the telcos are still being sold off. So let's see what happens there. Now, coming into this week, interest rate decision will be on Thursday, followed by the balance of trade the next day. Core PCE on Friday, the consensus is at 0.3%. Let's see if prices can remain stable in the current tariff environment. Let's see what the numbers show, which will give the Fed additional data on what they will do in their September Fed rate meeting. So that's it for this week. Please like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next week. Bye-bye.